Oklahoma was once the promise of affordable living, a state where wide-open land met wide-open dreams. Families could buy a home, start a business, and build a life without drowning in debt. For decades, that idea defined what it meant to live in the heart of America. But in the last few years, something has quietly shifted. The same market that made Oklahoma famous for its affordability is now pushing people away. Prices have climbed, insurance has spiked, and storms, both economic and literal, have tested the state's resilience. And behind the headlines, a question lingers. What happened to Oklahoma's real estate dream? It began, as many things did, after 2020, when lockdowns spread across the country and big cities emptied out. Americans started looking for space, real space. They wanted land, quiet, and room to breathe. Suddenly, small towns and rural states that had been overlooked for decades became destinations, and Oklahoma, with its low taxes and cheap housing, looked like paradise. Homes that once sat on the market for months were selling in days. Out-of-state buyers arrived from California, Texas, and Colorado. Investors came next, drawn by stories of houses selling for a fraction of coastal prices. For a while, it felt like a new frontier had opened up in the middle of America. The boom spread fast. Oklahoma City and Tulsa saw record sales. Developers broke ground on new neighborhoods. Cranes lined the skyline. Even rural counties, long ignored by growth, started to see bidding wars. People said it was finally Oklahoma's time, a chance to catch up with the rest of the country. But every boom carries the seeds of its own slowdown. The first warning signs came quietly. Insurance rates, already high because of tornado risk, began to surge. Severe weather events, hail, floods, and windstorms grew more frequent, and insurers adjusted their models. Premiums doubled in some areas. Then interest rates climbed, and the affordability that once defined Oklahoma started to disappear. A house that cost $1,200 a month in 2020 could now cost nearly twice that. Families who moved to the state for financial freedom found themselves stretched thin. The same dream that drew them in was now slipping out of reach. Investors who had fueled much of the boom began to retreat. Some sold off properties they could no longer rent for a profit. Others simply stopped buying. And with less demand came the quiet accumulation of inventory. Across cities like Edmond, Norman, and Broken Arrow, for sale signs began to linger a little longer. The rush was over. But the slowdown wasn't just about money, it was about confidence. People started asking whether Oklahoma was truly prepared for growth. Infrastructure strained under new populations. Roads, schools, and healthcare systems stretched thin. Meanwhile, energy prices and weather disasters reminded everyone just how unpredictable life here could be. What had once been seen as rustic charm began to feel like risk. In the suburbs, stories began to surface. A young family who bought at the peak now found their mortgage underwater. A landlord couldn't find tenants willing to pay the new rates. And longtime residents who had watched their quiet towns transform started to wonder if the change was worth it. Some packed up and left, moving back to Texas, Colorado, or the Midwest. Others stayed, hoping the market would correct itself before things got worse. And in a way, it did. By late 2024, home price growth across Oklahoma had slowed dramatically. Some neighborhoods saw prices fall. But it wasn't the crash that some had feared. It was more like a long exhale after years of holding the market's breath. Sales slowed. Builders paused new projects. And the state's housing market settled into a kind of uneasy balance, not growing, not collapsing, but waiting. For buyers, this moment feels confusing. On paper, Oklahoma is still one of the most affordable states in the country. Median home prices remain well below the national average. But affordability isn't just about price, it's about the total cost of living. And when insurance, maintenance, and higher interest rates are factored in, the math looks different. Many potential homeowners are choosing to rent instead. And for the first time in years, new rental developments are outpacing home construction. Meanwhile, population trends are changing too. Oklahoma once gained thousands of new residents each year. Now that growth has slowed, even reversed in some areas. People continue to move to Tulsa and Oklahoma City, but smaller towns are emptying out. Rural schools are closing. Downtown storefronts sit vacant. The migration that once filled the state's housing market is beginning to flow the other way, quietly, steadily. Still, not all is lost. Oklahoma's real estate story isn't one of collapse, it's one of adjustment. After the frenzy of the pandemic years, the market is finding its equilibrium. Builders are focusing on smaller, more efficient homes. Communities are rethinking zoning and development. And a new generation of buyers, many from within the state, are stepping in to rebuild confidence from the ground up. These shifts are slow, often invisible from the outside, but they are happening. At the same time, new industries are shaping the state's future. Energy remains strong, but technology and logistics are growing. Oklahoma City is attracting startups and remote workers. Tulsa's revitalization projects are transforming old districts into walkable communities. Each of these efforts brings new life and new housing demand, even as the broader market cools. It's a reminder that real estate is cyclical, but communities endure. And yet, challenges remain. Climate risk continues to shape insurance markets. Infrastructure funding lags behind growth, and the state's reliance on volatile energy prices makes long-term planning difficult. These aren't just economic problems, they're human ones. Behind every statistic are people adjusting their lives, recalculating their dreams, deciding whether to stay or go. The quiet stories behind those choices define what comes next. For many Oklahomans, staying means adapting. It means rebuilding after a storm, refinancing when rates fall, or turning a house into a rental instead of selling at a loss. It means community, neighbors helping neighbors when the numbers don't add up. That resilience is what has always set Oklahoma apart, a stubborn optimism that refuses to fade, even when the market does. If you drive through Oklahoma City today, you'll still see construction cranes and open houses. You'll see young couples touring homes, retirees downsizing, and investors searching for the next opportunity. The surface still looks strong, but beneath it, the market is more cautious, more deliberate. People are learning from the boom and the correction that followed. They're asking harder questions before buying. They're calculating more carefully. And in that patience lies a kind of stability that the last few years didn't have. The national media often paints real estate in simple terms, boom or bust, crisis or comeback. But Oklahoma's story is somewhere in between. It's the story of a market and a people adjusting to new realities, not collapsing, but evolving. And in that evolution, there's something hopeful, because the lessons learned here about balance, risk, and resilience will shape not just Oklahoma, but the next chapter of American housing. Oklahoma's future won't be defined by headlines or price charts. It will be defined by how it responds, how it rebuilds trust, how it reimagines growth, how it protects the affordability that once made it special. The dream isn't gone, it's just changing shape. And maybe in that change lies the real story. This is DreamSquare, where we explore the places we live, the markets that move us, and the stories that shape our homes.